Hello, I'm Jackie McLaughlin with Chazin, and welcome to this special introduction to our 5-part series on not-for-profit financial statements. Now, you might be wondering, why should I spend time watching videos about budgets and financial statements? I'm busy writing grant proposals and running programs. Here's the truth. Strong financial management is one of the most powerful tools you have to win grant funding, and yet it's often the most overlooked aspect of grant readiness. Over my 18-plus years working exclusively with nonprofit organizations, I've seen incredible missions struggle to secure funding, not because their programs weren't worthy, but because they couldn't demonstrate financial competence. And I've seen organizations with modest programs win 6- and 7-figure grants because they could prove they had the financial infrastructure to manage funds responsibly and to deliver results. Today, I want to show you exactly how the topics we'll cover in the series, budgeting, fiduciary responsibility, and understanding your financial statements, directly impact your ability to win grants and maintain strong relationships with funders. By the end of this video, you'll understand why financial literacy isn't just for your CFO or board treasurer. It's essential for anyone involved in fundraising and grant writing. Let's start by putting ourselves in the grant maker's shoes. Imagine you're a program officer at a foundation and you have $500,000 to distribute this year. You receive 200 applications from nonprofits doing important work, feeding the hungry, educating children, protecting the environment, advancing social justice, all worthy causes, all passionate leaders. But you can only fund 10 to 15 organizations. How do you decide? Yes, you can look at program design and outcomes. Yes, you assess community need and organizational mission. But here's what many nonprofit leaders don't realize. You also conduct a rigorous financial review. You're looking for evidence that this organization can actually execute what they're proposing, that they won't misuse funds, that they'll still be around in 3 years to sustain the impact. Grant makers are asking questions like, does this organization have a realistic budget for this project? Does their board provide adequate financial oversight? Are their financial statements clean and easy to read? Do they understand the differences between restricted and unrestricted funds? Do they have enough reserves to handle a cash flow gap? If a payment is delayed, have they properly budgeted for overhead and indirect costs? If the answers to these questions raise red flags, your application, no matter how compelling the narrative, gets moved to the no pile. This is why financial management matters for grant success. It's not just about keeping good books. It's about demonstrating to funders that you are a credible steward of their investment. Now, let me walk you through what most grant applications actually require, and you'll see how every topic in our video series connects directly to these requirements. First, nearly every grant application asks for a project budget. Not just a number, a detailed line item budget showing exactly how you'll spend their funds. Personnel costs, program expenses, overhead allocation, everything. This is where understanding how to budget becomes critical. Funders can tell you when a budget was thrown together at the last minute. They can tell when you haven't thought through the true cost of your work. They can tell when your budget doesn't align with your narrative because the numbers don't support what you say you'll do. In our Why Budget and How to Budget videos, we'll show you how to create budgets that are strategic, realistic, and aligned with your organizational goals. These same principles apply to grant budgets. When you understand budgeting at an organizational level, creating compelling project budgets becomes much easier. Second, most applications require financial statements. Typically, your most recent statement of activities and statement of financial position. That's your nonprofit's P&L and balance sheet. Funders review these documents closely. They're assessing your financial health, your sustainability, your revenue diversity, and whether you're managing restricted funds properly. If your financial statements are confusing, incomplete, or show financial instability, it damages your credibility. In our videos on the Statement of Activities and Statement of Financial Position, we'll teach you how to read these documents, what the key sections mean, and what funders are looking for when they review them. Even if you're not the person preparing these statements, you need to understand them well enough to speak confidently. Third, many applications ask about your governance and internal control. Questions like, does your board review financial reports monthly or quarterly? Do you have a conflict of interest policy? Do you have a whistleblower policy? Does your board include members with financial expertise? Do you carry a director's and officers' liability insurance? These questions aren't optional checkboxes. They're assessing whether your organization has the governance infrastructure to manage funds responsibly. This is where our video on fiduciary responsibility becomes essential. Understanding your legal duties as a board member or executive director isn't just about compliance, it's about building funder confidence. Fourth, many funders ask about your overhead rate or indirect cost allocation. They want to know what percentage of their grant will go to program activities versus administrative costs. This is where many nonprofits stumble. They're afraid to include adequate overhead in their budgets because they think funders only want to pay for direct program costs. But here's the reality. Sustainable organizations need infrastructure. They need technology, finance staff, executive leadership, and office space. Sophisticated funders understand this. When you understand budgeting properly, you can allocate overhead appropriately and explain it confidently. You can show funders that you've thought through the true cost of your work, not just the direct expenses. Now let me break down specifically how each video in this series will help you with grant applications. Video 1, Why You Should Budget. Budgeting keeps you consistently progressing towards your strategic plan. It ensures you're focused on the right priorities and not getting distracted by opportunities that sound good but aren't aligned with your mission. For grant applications, this matters because funders want to see that the project you're proposing fits into a larger strategic vision. They don't want to fund one-off projects that aren't sustainable or aligned with your organizational goals. When you have a strong organizational budget tied to a strategic plan, your grant proposals become more coherent and compelling. Your budget also reduces decision fatigue and serves as a guidepost for the year ahead. This means when unexpected opportunities or challenges arise mid-year, you have a framework for decision-making. Funders value this kind of organizational discipline. Video 2, How to Budget. This video walks you through the complete budgeting process, from budget managers creating initial drafts, to finance staff consolidating them, to executive director approval, to finance committee review, to full board approval. Why does this matter? Because the same collaborative, rigorous process should apply to all funding requests, including grant budgets. When you involve the people who will actually execute the work in creating the budget, it becomes more accurate and realistic. When you have finance staff review it, you catch errors and omissions. When leadership approves it, you ensure alignment with organizational priorities. Grant reviewers can tell the difference between a budget that's been vetted through a thoughtful process and one that was created in isolation by a grant writer who doesn't fully understand program costs. We'll also bust a critical myth in this video. Nonprofits are allowed to make a profit. In fact, you must if you want to sustain yourself. This same principle applies to grant budgets. Don't be afraid to budget for sustainability. Build in appropriate overhead, include reserves, and demonstrate that you're thinking in the long term. Video 3, Fiduciary Responsibility. This video covers your legal responsibilities as a nonprofit leader, the duty of care, duty of loyalty, and duty of obedience. We'll talk about reducing liability risk, understanding internal controls, and setting the proper tone at the top through policies like conflict of interest and whistleblower. For grant applications, this is about demonstrating governance strength. When funders ask about your board's oversight, your policies, and your insurance coverages, they're assessing the risk. Are you the kind of organization that takes financial stewardship seriously? Do you have the infrastructure to maintain funds appropriately? Strong governance isn't just about avoiding problems. It's a competitive advantage in grant seeking. Organizations with strong boards, clear policies, and robust oversight are more attractive to funders. Statement of Activities, Video 4. This is the nonprofit version of an income statement or P&L. We'll explain how to read this statement, understand revenue recognition, and navigate the complexities of restricted versus unrestricted funds. This matters enormously for grants because most grant funding comes with restrictions. Donors and funders can specify exactly how you must use their money. If you don't understand how to track restricted funds separately, how to recognize them as revenue appropriately, and how to spend them only on the designated purpose, you'll run into serious problems. We'll cover permanently restricted funds, temporarily restricted funds, unrestricted funds, and board-designated funds. We'll explain why you should never, ever spend restricted money on unrestricted purpose. This isn't just accounting theory, it's critical for maintaining funder trust and staying in compliance with grant agreements. When you can speak intelligently about how you'll track a funder's grant separately, when you'll recognize it as revenue, and how you'll report on its use, you demonstrate financial sophistication that builds confidence. Video 5, Statement of Financial Position. This is the nonprofit version of a balance sheet. We'll show you how to read this statement, understand net assets, and calculate exactly how much unrestricted cash you have available. Grant funders are reviewing your balance sheet to assess financial health and sustainability. They're looking at reserves. Do you have a cushion for unexpected challenges? Your liabilities. Are you over-leveraged? Your net assets. Are they positive or negative, restricted, unrestricted? They're also assessing whether you have the capacity to take on the project you're proposing. If you're applying for a grant that requires a 25% match, do you have unrestricted reserves to cover that, or can you raise it? If the grant has a reimbursement payment structure, do you have enough cash flow to front the costs? Understanding your statement of financial position helps you know what you can realistically commit to in a grant proposal. It prevents you from applying for opportunities you can't actually execute. Here's the bottom line. Grant success isn't just about good programs and compelling stories. It's about demonstrating that you have the financial infrastructure, governance, and stewardship to turn funding into impact. The 5 videos in this series will give you the financial literacy you need to create realistic strategic budgets that align with your mission, understand and fulfill your fiduciary responsibilities, read and interpret your financial statements confidently, speak intelligently with funders about how you'll manage their investment, and build the kind of financial credibility that makes you a competitive grant applicant. Whether you're an executive director, a development professional, a board member, or a program manager involved in grant writing, these skills will serve you. You don't need to become an accountant, but you do need to be financially literate enough to inspire funder confidence. I encourage you to watch all 5 videos in this series. Take notes, ask questions, share them with your team, and then apply what you learn to your next grant application. I think you'll find that strong financial management becomes one of your greatest assets in fundraising. Thank you for watching, and if you need support with your nonprofit's financial management or grant readiness, visit us at Chazin.com. We're here to help you build the financial foundation that attracts funding and advances your mission. Now let's dive into video 1, why you should budget.